On May 15th, 2026, something quietly happened that's going to reshape personal finance more than anyone realizes. OpenAI launched personal finance tools inside ChatGPT Pro. You can now connect your bank accounts, credit cards, and investment accounts directly to ChatGPT through Plaid. Then you can ask it anything. How much did I spend on takeout last month? Where am I overspending? Should I move money to a high-yield savings account? Build me a budget? Optimize my investments? And 5 days before this launch, on April 20th, a financial advisory app called Hiro, which had managed over $1 billion in client assets, quietly shut down. The implication is huge. AI is now actively replacing the traditional financial advisor, and not slowly all at once. So today I'm doing something different. I'm asking, can ChatGPT actually replace your financial advisor? And I'm comparing it directly to one of the most beloved DIY finance books ever written, The Simple Path to Wealth by J.L. Collins. Because if a 200-page book already gave you the answer for free, do you really need either ChatGPT or a 1% of assets per year human advisor? Let's find out. Welcome to Earnings Per Page, where I distill the world's best finance books and the most important financial trends into honest breakdowns. Hit subscribe. Let's get into it. First, the book. The Simple Path to Wealth started as a series of letters Collins wrote to his daughter explaining how to invest. He didn't intend to write a book. He intended to keep her from making the same money mistakes most people make. The letters got picked up online. They went viral. The book sold over 500,000 copies, and the entire philosophy can fit on a single page. Lesson 1. Stocks beat everything over the long run. The single most important insight in the book. Over any 20-year period in American history, broad stock market index funds have outperformed virtually every other major asset class. Bonds, real estate, cash, gold, most actively managed funds. Collins is brutally direct about this. Pick a low-cost broad market index fund, hold it for decades, and ignore everything else. Lesson 2. The market is volatile but not risky. This is Collins's killer reframe. Volatility is the day-to-day swing in prices. Risk is the chance of permanently losing money. Most investors confuse these two. They see volatility, a crash, a correction, a scary new cycle, and they panic sell. That panic sell converts volatility into actual risk. Collins's lesson: if you understand that the market will drop and you have the discipline to hold through it, you eliminate most of the risk that other investors create for themselves. Lesson 3. Cost matters more than almost anything. Collins is fanatical about expense ratios. He argues that a typical financial advisor charging 1% of assets per year, compounded over 30 years, can quietly extract 30 to 40% of your eventual wealth. His solution: fee-only index funds with expense ratios under 0.1%. Collins recommends Vanguard's VTSAX as the simplest possible vehicle. One fund, buy it, hold it, ignore everything else. Lesson 4. FU money. This is Collins's famous concept. FU money is the savings cushion that allows you to walk away from a bad job, a bad boss, or a bad situation without fear. It's not retirement money. It's freedom money. Even 1 year's worth of expenses in savings dramatically changes how you experience work, relationships, and decisions. The book argues that FU money is the single most life-changing financial milestone you can hit. Now, the matchup: ChatGPT versus The Simple Path to Wealth. Round 1. Cost. ChatGPT Pro costs roughly $240 per year. The Simple Path to Wealth costs roughly $15. A human financial advisor charges 1% of your assets. On a $500,000 portfolio, that's $5,000 per year every year compounding. Winner. The book by a mile. Round 2. Knowledge depth. Collins distilled 4 decades of investing experience and DIY financial wisdom into 200 pages. ChatGPT has read essentially every personal finance book ever written, including Collins' book. In raw knowledge breadth, ChatGPT wins. In knowledge depth and unified philosophy, Collins wins because a book has a consistent point of view. ChatGPT often gives you the average of all conflicting advice. Round 3, personalization. The book can't see your bank account. ChatGPT now can. If you give it permission, it can analyze your actual spending patterns and offer specific advice on your real situation. Winner, ChatGPT by a wide margin. The book gives you the framework. ChatGPT applies it to your specific numbers. Round 4, behavioral discipline. Here's where everything flips. The hardest part of investing isn't knowing what to do, it's doing it consistently for 30 years. Holding through crashes. Resisting the temptation to time the market. Sticking to the plan when everyone around you is panicking. A book reinforces principles every time you reread it. A human advisor talks you off the ledge during market crashes. ChatGPT, at least in its current form, doesn't proactively check on you. It doesn't intervene when you're about to make an emotional mistake. It only answers what you ask. Winner. Book and human advisor tied. ChatGPT distant third. Round 5. Risk of bad advice. Now, the elephant in the room. ChatGPT can hallucinate. It can confidently give you advice that's outdated, wrong, or specifically inappropriate for your situation. Research has shown that AI tools provide financial advice that ranges from genuinely useful to subtly misleading. The book, it's been peer-reviewed by hundreds of thousands of readers. Its mistakes, if any, are well documented and corrected. Winner Bookie's book by a comfortable margin. Round 6. Privacy. Here's the worry I have about the May 15th ChatGPT launch. You're now feeding your complete financial life into an AI system. Yes, OpenAI says they delete the data within 30 days if you disconnect. But research from Harmonic Security found that more than 4% of AI prompts contain sensitive information, with that share exceeding 20% for file uploads. The book asks for nothing. ChatGPT now asks for everything. Winner? Book. Final scorecard. Out of 6 rounds, the book wins 4. ChatGPT wins 2. Now, the honest verdict. Should you use ChatGPT for financial guidance? Yes, with limits. It's an extraordinary tool for understanding concepts, running scenarios, and analyzing your spending. But it should not be your sole financial brain. Should you read The Simple Path to Wealth? Absolutely yes. It's still in 2026, with all the AI in the world, one of the clearest, most actionable, and most honest finance books ever written. The combination that actually wins. Read the book, build the framework, use ChatGPT for specific analysis and scenario testing. Hire a fee-only fiduciary advisor for major life transitions, buying a house, planning retirement, navigating an inheritance. AI is not replacing financial advisors, it's redistributing the work. The mechanical analysis goes to AI. The strategic and emotional work stays with humans. My rating on The Simple Path to Wealth, 9 out of 10. The one point off is that some specifics around tax-advantaged accounts get dense for total beginners, but the core philosophy is unmatched in its clarity. If this helped you think about AI and financial advice differently, subscribe to Earnings Per Page. Next week, I'm breaking down a book about how to actually use AI to enhance, not replace, your personal financial system. Drop a comment with whether you'd connect ChatGPT to your bank account. See you in the next one.